Well, hi there folks, it's Matt Hasten here looking at this week's property market. Now as we dive deeper into the year, we're starting to really learn how this 2023 market is behaving. Right from the get-go, we've seen a high number of people attending our open home inspections, groups in excess of 30, 40 and even 50 attending open home inspections, which does reflect almost boom time type selling conditions. However, there's also a limited supply of property available for this time of year. Normally we'd like to see at least 30% more stock on the market, and that's a contributing factor to why we are seeing such a high number of people attending these inspections. Now, despite huge open home numbers, we're actually seeing a smaller percentage of buyers who are financially ready and emotionally committed to purchasing a property. Now, that reflects a more cautious and conservative property market. We're seeing such behaviour play out around the auction market in Sydney, where last week we saw more vendors withdraw their homes from auction day, which does suggest that there's that lack of competitive tension. The auction market last week and the auction clearance rate still a little bit subdued, sitting at 54.2%. Now, of course, the big elephant in the room for the property market in 2023 is, of course, interest rates. We know the RBA lifted the cash rate for the first time last week in 2023, but it's their hawkish commentary which has caught a lot of people by surprise, suggesting that they are going to lift the cash rate higher and for longer in order to curb inflation. Now, as a result of that, NAB during the week have come out and upgraded their forecast around the cash rate, suggesting it will now land at 4.1%. They previously predicted it was going to be sitting at 3.6%. So the NAB are now suggesting that for the next 3 consecutive board meetings, the RBA will be lifting the cash rate. And we are seeing a really noticeable impact about how this is weighing on overall consumer sentiment. So boiling all of this down, what we are seeing in the market right now is there is no question property prices are still softening, but they're doing so in an orderly fashion. We're also seeing transactions just improve and providing enough confidence for buyers in the market now to establish where market value is sitting in 2023. There is no question though, this limited supply of property that is available at the moment is helping to assist property prices and some level of stability in the market. We're also seeing more buyers adjust to this new environment and building confidence when they're starting to understand and appreciate where value is sitting. So we are expecting to see more people transact over the coming quarter. And auction does remain the preferred method of sale, but the lesson for sellers is to review and understand what your buyer feedback is and adjust your strategy accordingly in order to achieve the best outcome. So that's what's unfolding so far in the 2023 market. Thanks so much for watching, and our entire team looks forward to seeing you out and about, and I'll catch you all next week.